are getting things started. I hear the phone ringing, and we are going to start out with a guest we haven't talked to in a couple of weeks, Anne-Marie Baiynd. She's an author and financial analyst.
Good morning.
Good morning, Anne-Marie. We haven't spoken to you in a couple of weeks. How you doing?
Doing well. How about you guys? Loving this weather.
Oh yeah,
Great
oh
weather.
yeah.
Finally. Spring has
You
sprung.
know, I I
The
liked
never-ending
it.
winter.
I liked it when it was cold too, because it's just an adventure every day.
It's fine for a month of two of coldness, but when you're like 5 or 6 months of coldness, enough is enough already. So, excellent weekend here in the Metro Detroit area. It was 77 degrees here yesterday. Unbelievable weather after this winter.
You can officially put
I
away the
know.
winter coats. You can put the winter. Lisa's done it like 3 times
You
so
short the
far.
winter coats.
Yeah, put it
For a
downstairs.
couple of months.
Well,
Yeah,
yeah, exactly. Yeah, you never.
short-term trade.
You want to
Short-term
let. You
trade.
want to know where they're at in case you wake up in the morning and there's like frost or something. But, anyways, we haven't talked to you for a while, and market might be like right back where we were when we talked to you last. This trading range is it getting a little bit annoying to you here, or are you being able to follow your rules, keep your discipline, and make money while the market's in this trading range?
Again, that really is it. You hit the nail right on the head. It's about keeping your discipline, and when you don't see the markets advancing, you just slip into level to level trading. I'm going to trade from support to resistance and resistance to support, and I'm just going to be happy with what it is I pick up in the space and not get too anxious about going after any home runs. Certainly, if you're trading the broad market, that's been the ideal way to pay attention to things. And it's really got a nice little punch up here from Friday's move in continuation, but everything to me looks like we'll bump into sellers as we get in to the top space. There seems to be a lot of arguing about where the market should go and a pretty even spacing of where buyers and sellers are putting their bets. And so for us, as smaller traders in this big space, we just need to look at these footprints and say, hey, listen, looks like they're going to level out here. I'm going to take my crumbs and leave until the next cycle.
Well, we've been in this trading range in the overall market. Are you playing any individual equities too in the same trading range? Because some of the stocks have been following this similar trading range where they're getting up to resistance, they sell off, back to support, they buy. Like it's almost just like a channel here. Anne Marie, is there any other stocks that you've been focused on?
Well, you know what? I think I try not to get myself involved with something that's too range bound when I look
Okay.
at equities. And so I will look for things that are really trying to break out of their spaces or have a very wide range. Like Netflix has had that range from 575 to 555. And, right now it's bouncing off of that 555-ish level, so it should move back up into 565, 570 if it's holding that space. And then, really been watching some things like Baidu, seeing how it's going to recover off of this space. It lost that 200 level pretty handily, came into 196 and then holding up again, so I'm staring at that. And then a couple of these guys that have pulled back really hard, I'm looking to see them bounce. I'm looking for Applied Materials to bounce, AMAT, and for LinkedIn, at least to recapture some of this monstrous drop it had through the earnings release. And then, of course, Twitter, we'll see where that goes.
Let's go to the LinkedIn here, and like, how do you play it? Do
Yeah.
you wait for like a double bottom to form? I had talked about, hey, if this thing gets back above Friday's high, I think it was like 209.45, 210, it has a chance to run. You wait for just a consolidation in a tight range, or weekly options. How do you play it?
For these guys, my thought is the following. It came in, had a really horrendous response to the earnings, and then had a bounce that really pulled back. And Friday, what we were doing is just sitting on this sideways pattern that's come up into the resistance area. So my thought is the following. If I had buyers that came in and tried to settle me in at 185 and held me again, and then I had buyers that came in one more time at 198, when I get above this 208-ish region, I really have blown past all the sellers that have been trying to beat me down over the last few days there. So the way I like to do that is I'll take a Fibonacci tool and I will look at the 1 hour candlestick from the earnings space and I'll draw the range on there. For this particular candlestick, it looks like it's about 183.30 to 252-ish or something like that, 250. And so I'll start looking at the 38.2% retracement and the 50. Now, interestingly enough, that 38.2 is 209.85. And so that's going to be it's going to be a pretty solid rejection zone. So what we have to do is watch the buyers hold that level. If the buyers can hold that level, say in the first 30 minutes of the day, it's going to try and creep its way back up into that 50% range. It's very far away from its 50, and so it's going to try to struggle there. Clearly, sellers still in control here, so we have to anticipate that they're going to try and force us down one more time if we decide to be buyers. But for me, I'm going to watch this crest that 209.50. If it comes back in and can hold 205, I'm going to try a bounce off of the support, and I'm going to ride it, see if it can get up into 216. My thought is that that's really what it's going to try to do before the sellers try to come in and pound on it again. It just got pounded. And so we have to anticipate that they are still going to come in and overwhelm us as buyers until the buyers gain more structural ground, because we're still seeing volume low on any kinds of bounces. So it's going to be a little bit of a tentative trade, going to have my stop really tight. It's going to only be about $1.20 wide.
Wow.
And I'm going to try and run with it.
Anne-Marie, similar
That's why
story.
I'm going to wait for it to come back.
Similar story here on the Twitter. Obviously, it got pounded there after the earnings and has drifting down here for the last couple of days as well. I've been saying this thing could see 35. There was a lot of support there in November and December back at that level. Not sure if we're going to get that lower or not. How are you playing Twitter? Are you playing this at all?
Well, you know what? I'm looking at Twitter intraday. It's I expected buyers to come in and defend this. I really did. And I do see 35, 36. Yes, Joe? Were you saying something?
No.
I heard someone. Oh, okay, sorry. Yeah, I saw it coming in, and I thought for sure it would try and hold this 40-ish level, but it collapsed right through it. Now sitting down at this 38.27-ish area, and really, if I were to eyeball where the next group of defending buyers are, it's not until like 36 again, and then maybe 34.90, something like that after the fact. And really, it looks like it's going to go down there. So when you think about a lot of times we look at this, and when we want to trade it, we go, man, that seems to have fallen a lot. I'm concerned about taking a short. And when it falls, we get disgusted with ourselves because we go, oh, man, I should have taken it. So here's how you focus on that rhythm. Forget about the fact that it's moved a bazillion pieces and just say to yourself, where's resistance? Are the buyers setting up at that space? And I'm going to take the fact that the buyers are not setting up at that resistance level, and I'm going to try the short there so I can at least come back down into the old congestion of support. See, when we look at a trade that looks like this, and it's gone a lot, and it's continuing to move down, but we're concerned about the move being over, the most logical low-risk space is at the punch into resistance where the buying pressure fails. And so you know at least you're going to get a little bit with the sellers. If you trade the break down, you don't really know where the new set of buyers are setting up. And so sometimes you can really get whacked that way. So from Twitter's perspective, I'm trying to see if this thing is going to come up and really try to force its hand at 38.50, 38.60. If it can't do that, I'm going to try and stage a short. There's still a lot of downside momentum sitting here, so I don't want to miss out on it. But at the same time, I don't know where the new set of value buyers are sitting, so I'm going to try and be a little bit cautious around this one.
Anne-Marie, speaking of buyer values or value buyers here, we've had a lot of rotation here coming out of some of the old leaders like the Twitters and the LinkedIns, and it has been moving into some of the laggards here. I even noticed some of the trading action on Friday. You saw Alcoa, which has really been dead money here for the last couple of months, finally get a lift and finally catch a bid. It actually rallied just quietly. Joel was pointing that out, over 60 cents there on Friday. And we have noticed it with some of the other stocks too. Some of the stocks, even like Caterpillar, which were dead money back there at 80. It's slowly been climbing up here too. It does seem like this market is sniffing around and looking for value out there. And they've been buying some of the stocks that have been dogs, and some of the money that's been, in the leaders is coming out and actually going into these laggards.
You know, I saw that same thing because AA is on one of my screeners because that's quite a hefty bounce. Now, my question is really the following. Are these big money managers looking around saying, listen, we've got to find pure value from a PE or whatever it is that they're looking at, and then trying to stake a claim in there? Or is something actually going on in the space that's projecting or telegraphing a big move higher in the market? That really, I don't know the answer to that. I'm inclined to say that I think they're just fishing around because there's too much negative divergence in the broad market for the charts to break out and hold. Now, they might break out, come back, retest, and hold the retest, but the divergence sitting there cannot be ignored. And so I think they're sort of fishing around with these laggards that they go, oh, this might be in, and then people are jumping in because they're seeing this volume carry through. But I think this is sort of a big question mark in terms of, what are they doing? If we can watch these big bounces in these spaces that have been laggards come back and hold new support levels. Like for me, I wouldn't want to get involved in Alcoa unless it comes back and retests like 1380. And I would look at maybe 1360 as my stop, 1340, something really tight because I'm concerned about the breakdown action. But if it can come in and do that and hold that region, then it's a whole new playing field, and it's a good indicator that we've got more upside. But for right now, this is just something that makes me raise an eyebrow that puts it on the screener for me to watch later.
Anne-Marie, before we let you go, just want to ask you about Apple here. Big run up into earnings, delivered, did everything they were supposed to do. Dividend increase, buying back more stock, great sales, and the stock doesn't react. You think it's more attributed that it had a big run up into earnings, or Dennis talks about the crowded trade. What's your take on Apple? I mean, if you look at it, the way they delivered, the pullback here, is it just giving you a chance to get in on the cheap?
Well, I think ultimately the answer to that is yes, right? Getting back on the cheap. But you said it the last time we were talking together. You know how a chart changes its the way that it moves and how it performs shifts when it slips into the Dow, right? Remember we were talking about that, and you said something to the effect of, it never bodes well for price action from that perspective. I think maybe it's a little bit of that. When a stock like Apple comes into earnings, there's so much expectation, so much absolute, hey, these guys are going to blow it out. Really, they're performing at par because we've set the bar, right? And the bar is now someplace very, very high for these guys. So for them to blow it out and for people to really say, no, this is my new value event, they're going to have to shoot the moon. And so far, they just delivered as expected. Very well. They did very, very nicely. Oh, well, that's Apple. And I do think it's, a space to come in on the cheap. When we look at Apple like this, for me, watching it go into earnings, I told my folks, I said, hey, listen, everybody wants to buy Apple. Everybody's excited to buy Apple. Just trade it into earnings and then get out the day off. Just absolutely do that the day before it does that. And really it ends up being the best thing to do because of that over expectation. We've got to think about it from that perspective. Right now it's coming into resistance. And so there's really a chance that it comes back down and tests another support area. Right now, this looks like a pullback space. If it comes in and it really can manage to hold 126.50, it's going to be another place to say, hey, I'm going to add a little bit more to my portfolio here. This, of course, we know these guys are just really a high-performance company, and so buying them on the cheap is always a great thing to do, really, just so long as you're not loading up in a space that it's going to retrace even a little bit more. So I'm always waiting for those bigger pullbacks.
Yeah, and actually, I did see an article last week about how a lot of times Apple will have that move, and then kind of after earnings, get the pop, and really it's hard to, how to follow through on it. Unfortunately, I bought puts the day before instead of the day off, but we'll see. It's creeping back up here. We'll see if it can build another base, make a new all-time high. We've been on the line with Anne-Marie Baiynd. She's an author and financial analyst living here in the great state of Michigan. She joins us every month or so to talk about the markets and her way of trading things. Anne-Marie, as always, thanks for coming on. We'll speak to you again soon.
Thank you for having me. Good luck trading today, gents.
Okay, we'll talk to you.
Thanks, Anne-Marie.